All right, it looks like we've reached critical mass, so we are going to go ahead and get started. Thank you again to everyone for joining us. Just a few housekeeping notes before we proceed. This workshop is being recorded. Oops, here we go. This workshop is being recorded, and you will all receive a copy of that recording following today's session. So if you have to step away at any time, not to worry. Again, you're going to receive a copy of this recording. We encourage you throughout the webinar to put any questions that you may have in the Q&A. I'm joined by my wonderful colleague, Katie Kashmir, here today, who is going to be answering as many of those questions as possible, but she's only one person, so she's going to try her best. And if you need to enable closed captioning or live transcription during the webinar, I'm going to be posting a link in the chat with instructions on how to enable this feature on Zoom. So a quick look at the agenda that we're going to cover over the next hour. I'm first going to do some brief introductions of myself, our dear friend David Woodward here, who I'm going to introduce in just a second, and why we're here, the partnership that we're really excited to announce with Oakland County. And then we're going to dive right into sort of the student loan basics. You can kind of think of this like student loans 101, the most important things that you should understand as a federal student loan borrower. So these topics include the different types of federal student loans, programs like PSLF or Public Service Loan Forgiveness, and income-driven or IDR repayment plans. These can be a powerful way to help lower your monthly payment. We're also going to talk about some of the more recent major policy updates. A lot has been going on in the world of student loans, and I know it's often difficult to follow along. There's lots of noise out there. So we're going to condense all of that and make sure that you walk away with knowledge of the most important things going on right now. And then we're going to wrap things up by showing you how to get started with Savi. This is an amazing free tool being provided to everyone in the county to take advantage of, to hopefully help lower their monthly payment and get their loans forgiven if they're eligible. So my name is Lindsay Clark. I'm the Chief Borrower Advocate here at Savi. I always like to say I'm a student loan borrower myself. I have a little over $200,000 in student loan debt, which it sounds like a lot, and it is. So if that makes any of you feel better about your own situation, then mission accomplished right off the bat. But my job here today is to really distill some of these complicated topics in a way that's understandable and that's going to really empower you around your student loans going forward. And I have the pleasure of being joined by David Woodward, board chair for District 1. And I'm going to turn it over to David right now, who's going to talk a little bit about his role in all of this and our exciting new partnership. David, take it away.
Thank you very much. And thank you, Lindsay, for presenting this and providing this information to the folks in Oakland County. On behalf of myself, the chairman of the board, and our county executive, Dave Coulter, we are extremely excited about this Oakland County partnership with Savi. I talk about it as bringing tools that can take advantage of programs that we know are out there that are sometimes so cumbersome that it's hard to get through, and Savi becomes part of the solution. When when myself and a number of my colleagues learned about Savi, it was actually through our national partners with the National Association of Counties, and very impressed on how another county, particularly a large county like ours, was using it. And we wanted to push the limits of what was possible. When we realized that Oakland County has about over 170,000 residents together holding north of $6 billion in student debt, we know it's a burden. We know it's a challenge, and we want residents to get the education to be able to meet the job demand in the future. It's part of our broad policy objectives. And so when the opportunity came for a partnership with Savi, which I think aptly is described as like the TurboTax of student loan debt, we jumped at the opportunity and made not only brought dollars to eliminate initial costs for all residents, to not only see what they enrolled in the best programs, what are the other programs that they could be possibly eligible for, with the goal of reducing student debt or even achieving student debt forgiveness. in eligible circumstances, we jumped right at it. And with broad support across this county and the support of our county executive, we're happy to bring this tool available. We're looking forward to people signing up and taking advantage of it and sharing their story. Did this help? Because from a public policy perspective, every dollar that's not unnecessarily going to student debt for the investment in your own an individual's education is dollars that get to be used in the local economy to help buy a home, pay the rent, provide for one's family, save for retirement. And it's long overdue. We've done this. The programs exist out there, and this is a tool that's going to make it easier for people to take advantage of all of those. So with that, Lindsay, I'll hand it back over to you.
Great. Thank you so much, David. And we will keep chugging along here. I want to just take a second to introduce you all a little bit more to Savi, because you might be a little bit less familiar with us. So Savi is a social impact technology startup. We're actually based in Washington, D.C., and we were founded by student loan experts and advocates who have been fighting on behalf of the borrower for more than a decade. And in 2017, this was the first year that borrowers could start applying for a program called Public Service Loan Forgiveness. And we're going to talk more about that in just a bit here. But all to say that over hundreds of thousands of borrowers applied and 99% were rejected for one technicality or another. And so we saw this and decided to do something about it. So we developed Savi as a technology platform and a human service to help borrowers like you and like me not only better understand our student loans, but to successfully navigate from start to finish around some of these really complicated programs. But along the way, our goal is to make the experience of being a student loan borrower a better one, because I think we can all agree it's not great. And we try to do that by identifying as much additional savings as possible through things like income-driven repayment plans. At Savi, we like to think of borrowers as our top priority. There are a lot of entities in this space that make money off of servicing your debt. They are in the service of your student loan debt, not in the service of you, the borrower. And that's what's different about Savi. We like to think that we are actually serving borrowers and not their loans, which is why we are here today to offer Savi's tools, support, expertise, and platform to all of the residents of Oakland County as part of an exclusive student loan benefit. So Savi partners with some incredible organizations across the country, AARP, MetLife, Unidos, you name it. We just put a couple here on the side. Some of these great organizations to provide our services as an exclusive student loan benefit, whether to employees, members, et cetera. And so what's great about this partnership with Oakland County, the first of its kind, is that we are offering our tools to all of the residents in Oakland County, as well as Oakland County government employees at absolutely no cost. All right, so you will all have access if you are a resident of Oakland County. All right, so with introductions out of the way, we are going to dive right in and talk about the good stuff here. Student loan basics. So some of the topics that we're going to be covering include student loan servicers. What are they and what role do they play with your student loans? The different types of federal student loans out there. This is a really important one, something I myself didn't know as a borrower for a very long time, that the type of federal student loan you have is going to impact your eligibility for certain repayment and forgiveness programs. And there may be corrective action you need to take in order to make that loan type eligible. We're also going to talk about income-driven repayment plans, or IDR. These can be a powerful way to help lower your monthly payment. And lastly, we're going to talk about public service loan forgiveness, or PSLF. And this is going to be especially important for any of the Oakland County government employees out there, or anyone else that is working in a public service capacity in Oakland County. This is one of the longest standing forgiveness programs in existence. It went into law in 2007, and it could forgive the remainder of your loan balance after just 10 years in public service. So again, we're going to go into more detail on that in just a bit. All right, so first up, let's talk about federal student loan servicers. So I've put a couple of these companies on your screen right here: Great Lakes, Ed Financial, Aidvantage, OSLA, Nelnet, Mohila. These are companies that are contracted by the Department of Education in the repayment and management of your student loan. So when you take out a student loan and go into repayment on that student loan, you are assigned to one of these federal servicers. And this servicer is in charge of managing the collection of payment on that student loan, right? Now, just to clarify, Savi, our company, is not a servicer. We would never take the place of one of these companies. You can kind of think of Savi more like a facilitator, an intermediary, or an advocate on your behalf. So if borrowers are on one side and servicers are on the other, Savi's sort of right in the middle. And our goal is really to reduce the friction that many borrowers experience with their student loan servicers. So we might do things like submit an application on your behalf and monitor that application to ensure that it achieves the desired outcome. We might get on the phone with you and your servicer to resolve an issue, which oftentimes happens with many borrowers unable to do so on their own. So our goal is really to help you navigate with these servicers successfully. Now, a couple important things to note about these servicers. First, you want to make sure you know which servicer you have, especially because over the last couple of years, many of them have changed. I will say this, it is completely normal for your loans to move from one servicer to another, perhaps once, twice, even more over the course or lifetime of your repayment. Why does this happen? Well, these servicers are on contract with the government, and sometimes those contracts end and aren't renewed. And so what happens when a servicer's contract ends, all of the borrowers that were being serviced by that company, right, need to be moved to a new or a different servicer for management going forward. So your loans aren't being sold. None of the terms of those loans are changing. You're simply going to have a new servicer. That's going to be a new website. You'll have to create a login, right? And that's where you're going to manage that loan on a day-to-day or month-to-month basis, setting up that auto debit, managing your monthly payments and things like that. So you want to make sure you know what servicer you have. Where can you find out what servicer you have? Well, there is one place and one place only, and that is studentaid.gov. And I'm posting this link in the chat right now. Studentaid.gov is the official website of the Department of Education. All right, so if you have any federal student loans, they will be tracked through studentaid.gov. When you log in using what's called your Federal Student Aid ID or FSA ID, this is what you created when you took out the loans to begin with, you will see right on that dashboard on the right-hand side the name of the servicer that you've been assigned as of now. All right, so just a good idea to double check to make sure you know what servicer you have. Then from there, you want to make sure that your contact information is fully updated with that servicer, because that's how they're going to be communicating with you about things like your due date, your monthly amount, etc. So you want to make sure that you've set up those communication settings, whether it's paperless, electronic, or you want to make sure that you have your updated contact information in there, again, so that they can contact you when and if necessary. All right, we'll keep chugging along here. Now we're going to talk about the different types of federal student loans out there. And again, this is really important because the type of federal student loan you have is going to impact your eligibility for certain repayment and forgiveness programs. So I'm going to talk through the different types of federal student loans in the green columns here, and then I'm going to touch on private student loans at the very end. So let's start on the furthest left-hand side of your screen with direct loans. The direct loan program began around 2010. So if you have a federal student loan that was dispersed to you from 2010 to present day, there's a very good chance it is a direct loan. The easiest way to tell if it's a direct loan is it will literally say the word direct or DL, which stands for direct loan, in that loan title. Examples include direct subsidized, direct unsubsidized, and even direct consolidation loans. Now, the great thing about direct loans is that they are pretty much eligible for all the programs we're going to talk about here today, including things like income-driven repayment and public service loan forgiveness. So if you've got direct loans, you're good to go. Now let's move on to these FFEL loans. And you'll see these are in red, which I'll touch on in just a second here. So FFEL loans, FFEL, stands for Federal Family Education Loans. Now, this was simply the loan program in existence prior to direct loans. So if you have a federal student loan that was dispersed to you before 2010, there's a very good chance it is a FFEL loan. The easiest way to tell if it's a FFEL loan is it will say FFEL or FFELP. That P just stands for program, but that's a FFEL loan. Examples include FFEL subsidized, FFEL unsubsidized, and even FFEL consolidation loans. Now, here's the thing about these FFEL loans. As they are in their current form as a FFEL loan, they're only eligible for one type of income-driven repayment plan called IBR, or income-based repayment. In order to be eligible for the entire range of income-driven repayment, as well as programs like public service loan forgiveness, FFEL loans need to be consolidated. Consolidation is a free federal process by which you are essentially creating what's called a new direct consolidation loan out of an existing loan or loans. So you can consolidate one loan, you can consolidate multiple loans, okay? But with these FFEL loans, in order to be eligible for a program like public service loan forgiveness, they need to be consolidated. All right, let's move on to PLUS loans. So PLUS loans come in two varieties, Parent PLUS loan and Grad PLUS loan. So let's start with Parent PLUS loans. You know, many people think the student debt crisis is a young person's problem, a millennial issue, when in fact the fastest growing demographic of student loan borrowers is actually ages 50 plus. It's parents taking out loans for their kids, and that's exactly what a Parent PLUS loan is. It's a loan taken out by a parent on behalf of a child, but in the parent's name. Now, when it comes to these Parent PLUS loans, just like the FFEL loans I was just talking about, Parent PLUS loans require consolidation in order to be eligible for things like income-driven repayment and public service loan forgiveness. Okay? So if you have a Parent PLUS loan and you're interested in pursuing those programs, you would need to consolidate in order to qualify. Now let's talk about Grad PLUS loans. Grad PLUS loans, as the name might imply, are loans given to graduate or professional students. And the good thing here is that they are eligible as is for programs like public service loan forgiveness. So they do not require consolidation in order to be eligible. So if at this point you're already starting to feel a little overwhelmed, thinking that was a lot of acronyms, you'd be completely right. It just goes to show you how complex and complicated the system can be. But here are the important takeaways. One, knowing what loan type you have. If you have a direct loan, you're going to be good to go. If you have a FFEL loan or a Parent PLUS loan, you may need to consolidate if you are interested in pursuing some of those programs we talked about. If you have a Grad PLUS loan, you are also good to go, right? So knowing your loan type, and then if you have a loan type that would require a corrective action like FFEL loan or Parent PLUS loan, looking into your options to consolidate should that be something that you wish to do. Now let's touch briefly on private loans. You know, of all the student debt out there, about 1.7 trillion, right? 90% of it is federal. So only about 10% is private. But many borrowers have a combination of both federal and private loans, myself included, because they will take out private loans when they've exhausted their federal options. So when it comes to private loans, these are obviously non-federal loans made by a lender such as a bank, credit union, state agency, or maybe even your school or university. Some examples include Wells Fargo, SoFi, Discover, Chase, things like that. Now, unfortunately, when it comes to private loans, they are not eligible for any federal repayment or forgiveness programs. And there is no corrective action that can be taken, like a consolidation, to make them eligible. Once they are private in perpetuity, right? Now, when it comes to private loans, if you are struggling, my best bet would be to reach out to that individual lender directly to see what options may be available to you. Because there is no federal overarching system by which they must abide, okay? Each private lender is going to offer its own set of repayment plans and terms and things like that. So the best source to get that information is going to be directly from that private lender. All right, any questions on private loans before we keep going? It doesn't look like any have come through. All right, we'll keep chugging along. Now we're going to talk about income-driven repayment plans, or IDR. So before I do, I want to back up just a bit and give a bit of more context as to how repayment in general works on your student loans. So when you go into repayment for the first time on your student loans, you are assigned to one of those servicers like we talked about. You usually have about a 6-month grace period before your first payment is due. And when you get that first bill, that is reflective of you being automatically put onto what's called the standard repayment plan. And the standard repayment plan calculates your monthly payment based on two things: how much student debt you have and a 10-year payoff horizon. Okay. So for someone like myself with a little over $200,000 in student loan debt, on a standard plan of 10 years, that monthly payment comes out to around $1,800 a month. It's absurd. And the Department of Education realized that most borrowers could not afford to make their monthly payments on a standard plan. So they introduced what are called income-driven repayment plans. And these plans calculate your monthly payment based on two different factors. So you could have $500,000 in student loan debt. It wouldn't matter. Under income-driven repayment plans, they are calculating that monthly payment based on two things: your income and your family size, okay? And we're going to go into more detail in just a second. But before I do, I kind of want to make sure everyone is aware of the structure of these plans. So income-driven repayment, or IDR, is sort of the umbrella term here. And then there are four primary types of IDR plans. There is the SAVE plan, which was formerly known as Repay. That is the newest income-driven repayment plan that was introduced last summer by the Biden administration. The PAY plan, which stands for Pay As You Earn. IBR, which stands for Income-Based Repayment. And ICR, which stands for Income Contingent Repayment. Okay. So again, IDR, income-driven, is sort of the umbrella term, and then there are four different types. But they all generally work the same way. They cap your monthly payments at anywhere between 10 to 20% of your discretionary income. What is discretionary income? Well, part of your income is set aside to cover the cost of living, and that leftover amount is called discretionary income, and that's what your payment is based on. Usually what they're looking at is your pre-tax income, or your adjusted gross income, or AGI. I'll give you an example. Let's say you are single with no dependents and an income of around $52,000 a year. On a standard, or I should say on an income-driven repayment plan, that comes out to around $160 a month. Now it's sort of a sliding scale from there. The lower the income, the lower that monthly payment. The higher the income, the higher that monthly payment. And if your income is low enough, you could be approved for as low as a $0 monthly payment. Okay. Now, in order to enroll in these plans, there is an application process. That application requires that you attach supporting documentation attesting to your income. This can come in either the form of your most recent tax return or a pay stub from the last 90 days. This needs to get submitted to your servicer. Your servicer will review it and say, okay, Lindsay, you're on the SAVE plan and you're going to be paying $160 a month. And it locks in that payment amount for 12 months. 12 months comes and goes, and you have what's called a recertification deadline. And by that deadline, in order to maintain yourself in that IDR program, you will need to resubmit an application with updated income documentation. And your servicer will basically do the exact same thing again. They'll review it, calculate it, and say, this is what your new payment's going to look like for the coming year. The assumption there being that from year to year, your monthly payment amount could fluctuate based on any fluctuations in your income or family size. When it comes to factoring in family size into these plans, every child dependent will typically lower that monthly payment by about $50 per child. Even unborn child dependents can count. Okay, so if you're pregnant, you can count that as an unborn child dependent on your income-driven repayment application, right? Okay. Now, another great thing about these plans is that you are actually eligible to have the remaining balance forgiven after 20 to 25 years worth of payments on that plan, depending upon which plan you are enrolled in. So because it forgives the remaining balances, right, the less you pay over that time, the more you get forgiven, which is why under an income-driven repayment plan, your goal is to minimize your monthly payment and maximize that forgiveness. Now, when it comes to that forgiveness, it is tax-free until 2025, Otherwise, after 2025, any of that forgiveness is considered taxable income. How long you pay for depends on a few factors, like the IDR plan and your loan type. So for example, in the SAVE plan, it's 20 years if you have undergrad loans, 25 if you have grad loans. For pay, it's 20 years. For IBR, it's 20 years if you borrowed after 2014, 25 if you borrowed before. And under ICR, it's 25 years. No application is needed to receive this forgiveness. It's done automatically after paying for the required amount of time. Now, I wanted to give a quick policy update because there's been a lot of movement when it comes to these IDR plans, specifically around the SAVE plan. Many of you might have been hearing about this in the news. So there were another wave of improvements to the SAVE plan that were scheduled to start July 1, but lawsuits were filed that put changes on hold. So these two improvements that were scheduled to start earlier in the summer were that payments were going to be reduced to 5% of your discretionary income for undergraduate borrowers, and borrowers with lower original principal balances were going to qualify for a shortened timeline to forgiveness. However, as a result of those lawsuits, a July 18th ruling by a federal court has put the entire SAVE plan on hold. In response to the court ruling, the following has occurred. Anyone enrolled in SAVE or who enrolls now will be placed in an interest-free forbearance. The processing of IDR applications has temporarily been paused, and you cannot apply online. That may have changed in the last couple of days. You may now be able to apply online again, but it's touch and go as of right now. Paper applications, including those that Savi uses, will still be accepted. So Savi submits their applications through digitally faxing those forms in. I'll show you that in a little bit later on in the presentation. So we have been uninterrupted in our ability to submit applications on behalf of borrowers, but you're able to enroll in other income-driven repayment plans as well. All right, now we're going to move on and talk a little bit about a program called Public Service Loan Forgiveness, or PSLF. So PSLF is essentially full forgiveness on the remainder of your loan balance, whatever that may be. It could be $5,000, it could be $500,000. It doesn't matter. Tax-free, so there are no federal tax implications here. After you have made 120 qualifying payments. Now, if you could see me on video right now, you'd see that I'm saying qualifying payments in major air quotes because the devil is really in the details as to what constitutes a qualifying payment. And it really comes down to satisfying these three things that you see on your screen right here simultaneously. Number one, you have to work for a qualifying employer. This is any government organization at any level, federal, state, local, or tribal, or any not-for-profit 501c3. Any and all employees of Oakland County qualify for public service loan forgiveness. The only stipulation here is you must work a minimum of 30 hours or more per week. However, you can combine multiple or part-time employment to qualify, so long as all of the employers are eligible and qualifying. Okay. I will also say that this program is retroactive going back to October 2007. So any qualifying employment that you've had from October 2007 to present day is fair game when it comes to this program. And it doesn't have to have been from the same employer. In fact, most borrowers work for 3 to 4 different employers over the course of that 10-year period. And all of those can count again, so long as they are October 2007 to present day. Unfortunately, for the purposes of this program, anything before October 2007 is not eligible. So that's number one, qualifying employer. Number two, you must also have a qualifying federal loan type. And the only type of federal loans that qualify are direct federal loans. And this is why we emphasize loan type so much earlier in the presentation, because it matters. If you have a non-direct loan, like a FFEL loan or a Parent Plus loan, you can consolidate those loans into a direct loan in order to qualify, okay? So that's number two, qualifying loan type. And then number three, you have to be repaying that loan on a qualifying repayment plan. And the types of repayment plans that qualify are income-driven repayment plans. It can be any one of those four that I mentioned, does not have to be the same one. It can be save, pay, IBR, ICR, right? And you need to make that payment for the on-time and full monthly amount. So you need to satisfy all three of these things simultaneously and make 120 of these qualifying payments in order to receive forgiveness, okay? At that point, you will receive forgiveness on the remainder of that loan balance, whatever that may be, right? Now, let me just clarify a few common misconceptions about these 120 qualifying payments. First of all, they do not need to be made consecutively. You just need to make 120 total cumulative qualifying payments. So let's say you work for 2 years at a qualifying employer and you accumulate 24 qualifying credits, and then you leave to go work for the private sector or take some time off. Nothing happens to those credits. They simply pause in accumulating. And if you were to ever resume your eligibility by resuming to work for a qualifying employer, it doesn't have to be the same one, it can be anyone, you can resume accumulating those credits, all right? So just want to clarify that. However, you can only receive one qualifying payment credit per one payment per one calendar month, right? Meaning you can't double up on payments in a month and get double the amount of credits, and you can't make a big lump sum payment and get more credits than you normally would. The easiest way to think about it is this. In any given calendar year of 12 months, the maximum amount of PSLF credits you can receive is 12. So if you can only receive a max of 12 a year and you have to get to 120 total, you are all very smart and can do the math here. That's 10 years minimum before you would receive forgiveness under this program. So, many people describe public service loan forgiveness or PSLF as a 10-year program, but I discourage you from doing that because it's not just about time served. It is really about these 120 qualifying credits where you're satisfying all three of those things: your employment, your loan type, and your repayment plan. So I would encourage you to think about it more in terms of those, an accumulation of those credits each year, working closer and closer to that 120. You can't qualify any sooner, however, than 10 years. All right, so how do you apply for public service loan forgiveness? Well, to apply, there's one form and one form only, and it is called the Employment Certification Form, or ECF. This form needs to get signed off by you, the borrower, and then it needs to get signed off by your employer, any current or previous employers you might have had. So let's say you currently work for a qualifying employer, and you've worked for 3 previous qualifying employers since 2007. You would need to submit a total of 4 forms right now in order to get this process started. 1 for each of your 3 previous employers and 1 for your current 4th employer. That employer will sign off and attest to that employer being a qualifying employer, the hours that you worked, the dates that you worked, and then that will get submitted to the Department of Education. We highly encourage, after you've submitted this initial round of ECFs or employment certification forms, to basically get your credit count current. Let's say you are at 80 credits, right, after you've done your initial round of submitting those forms. Each year going forward, or every 12 months, you should submit a new employment certification form for your most current or recent employer, inching your way closer and closer to that 120. Okay, so you can wait until you think you've reached the 120 to submit these forms in totality, but I discourage you from doing that. It's better to submit these often and early, is what I like to say. All right, let's take a quick pulse check. I know that some questions have been coming through that looks like Katie has been answering. So thank you so much, Katie. And it looks like we can keep chugging along here. I hope everyone is bearing with me. I know that that was a lot of information, but the great news is that now I'm going to show you how Savi is going to be able to help you navigate each and every step of the way. So while these federal programs can be amazing and they absolutely can get you forgiveness, they can be confusing and overwhelming, and you're faced with a lot of options And it feels like they're constantly changing. And you're right, that's because they are. And so with multiple different repayment options and forgiveness plans out there, you might be left wondering, what is the best plan for me? Am I taking the right action now? What should I be doing? All of these questions that typical borrowers face on a daily basis. It can be exhausting. And that's exactly why Savi exists. Oops, hold on, guys. Katie, are you able to hear me? It looks like my computer has frozen on my end.
I can hear you.
Okay, all right. Give me 1 second here.
Hey everyone, Lindsay is trying to get back on, so we'll just give her a minute. But I'm going to keep answering questions for everyone.
Hello, everyone. I apologize about that. We had some technical difficulties. Let me get my presentation back up here. Thanks for bearing with me. The screen just completely froze. All right, here we go here. All right. Let's see. Perfect. Hopefully everyone can see me. Okay. All right. We're back in action. Sorry about that, guys. And so I think I was talking about how miserable this whole process can be in navigating on your own, which is why Savi is here to make that easier for each and every one of you. So as I'm about to show you in just a second here, by answering just a few simple questions, Savi is going to be able to show you a personalized repayment and forgiveness plan, down to the cent as to what you'd be eligible for and how long it would take you to get to forgiveness. We also monitor for new programs and policy changes. As I mentioned, a lot has been going on in the world of student loans, and no doubt will continue to go on. And we are at the forefront of that. Being based in DC, we work a lot with regulators, policymakers to track what's going on and make sure all of that is not only implemented into our platform, but we communicate with you all, the borrowers, to make sure that you know exactly what's going on and when and if you need to take action. And then we take it a step further. We don't just show you what your best options may be. We actually take on that administrative burden for you and handle all of the paperwork and applications involved. So the paperwork to apply for income-driven repayment and the forms, multiple forms that you may need to submit for public service loan forgiveness. We handle all of that from start to finish. We pre-fill and digitize it. We submit it on your behalf to ensure that it reaches the desired outcome and a successful outcome. And last but not least, you're able to access personalized support one-on-one from our student loan experts. This is an incredible advantage, and I know something that so many borrowers are seeking because of how difficult it is to navigate this on one's own. And the best part is that through that technology, we try to make it as easy as possible. You start one application with Savi instead of multiple applications on your own. You're able to see your options and then literally with a click of a button, get enrolled and start saving. So I'm going to kind of walk you through the look and feel of Savi right now. This is your Savi dashboard, sort of like mission control for everything Savi. When you log into your Savi account, it'll be the first thing that you always see, and it's going to show you exactly what's going on, where you are in the process, what you might still need to do, things like that. When you're ready to get started, and I think David actually used this analogy perfectly, it feels almost like a TurboTax for your student loans. We're going to ask you some questions about your family, your marital status, your tax filing status, your income. These are all important factors in calculating your monthly payment on an income-driven repayment plan. We're also going to ask you about your employment. Employment is really important in determining your eligibility for certain forgiveness programs, whether it be public service loan forgiveness or others. There are over 100 forgiveness programs out there, and we're able to detect which ones are going to be best for you. We highly encourage you to enter not only your current employer, but any previous employers you may have had, because as we mentioned, this program, public service loan forgiveness, is retroactive. So you can see here, this is someone who's entered in 3 previous employers into their Savi account. And then the last step in the process is linking your federal and or private student loans. We provide you with the ability to do this either via a loan sync, or you're able to do this by actually manually entering in that information as well. And you can see here, this is a different version of that loan sync as well, where you can use just your telephone number that will pull in the information that's necessary from that loans so that you don't have to enter it all in manually yourself. And then that's the last step, and you reach the end, which is called our plan results page. And this is where we show you exactly what those best options could be. So you'll see here, this is someone whose new monthly payment would be about $18 a month on the Save plan, what that total payment over time would look like, so how much they would have paid in totality by the time they'd reached the finish line, how long until they'd be eligible for forgiveness, down until the year and the month exactly, and how much in forgiveness they'd be eligible to receive, if eligible. They can expand below for more details and compare this plan to what they might standard pay on what we would call the standard plan option. They will also see other plan options. So you can expand below. Someone might be eligible for a couple of different income-driven repayment plans. We're going to capture and show all of that for you here. Now, it's at this point where the next steps are going to be completing those applications and that paperwork. And that's really where Savi comes in. And the best part about this partnership with Oakland County is that they are covering and subsidizing this cost for all county residents. So normally that's part of a sort of a premium feature that we offer. And it is completely free for all Oakland County residents. I'm going to show you exactly what amazing value this can provide you in just a second here. So again, when you're going through your Savi account, you'll want to make sure that you select a plan and select Essential. That's going to give you access to all the application support as well as personalized support from our student loan experts. So just to give you an example here, on the left-hand side, this is someone with 3 different qualifying employers, and therefore they're going to need to submit 3 employment certification forms. With the click of a button, they're able to create those forms, and we're actually going to send them off to their previous employers for them. So we are going to help manage this process from start to finish. On the right side here, you can see this is a pre-filled digitized income-driven repayment application form. Again, we make it so easy that you can actually do it from your phone. And once those applications are in motion, you'll be able to track and manage and monitor all of them from one place. So you can see here on the left again, that same person with 3 different employer certification forms for public service loan forgiveness, as well as their income-driven repayment application. And then zoomed in on the right, they're going to be able to see exactly where they are in this process, what they might still need to submit, what we might still need from you. It really helps bring a transparency and a visibility to this process that many borrowers find difficult to achieve on their own or in working directly with their servicer. And then last but not least, if they have any questions along the way, borrowers can reach out to our support team. We have an incredible help center with tons of great content and explanations that can help guide you through this process. You can also send a message to our support team by clicking Contact Support. And again, you can get started by scanning the QR code you see here, or everyone will receive an email after this webinar with an activation link. That can also help you get started. So whatever your preference may be, we just want to make sure that everyone is able to get in with ease, and we're able to help to get them started in navigating towards that finish line. All right, so just a few things to wrap up here. Again, completing that Savi account, entering in that information and seeing what your best options are, and reaching out to support if you have any questions, making sure to click that essential plan. That's going to give you access to personalized help at no cost, as well as all of the application support that you could ever want in trying to navigate through this process. All right. Katie, I saw a few more questions come through. Are there any that might be helpful to answer out loud?
Yeah, there are some about how, if you're working part-time jobs, how you get that to count for public service loan forgiveness.
Yeah, great question. So if you are working part-time jobs, so long as the employers that you're working for are qualifying employers, you are able to count that and accumulate those hours towards the 30 hours or more you need. So let's say you work part-time at a nonprofit hospital and part-time at another nonprofit hospital. And one may be 15 hours, and the other might be 20 hours. You're going to need to fill out a form for each, an employment certification form for each. They will sign off and attest to those average hours worked. And then those both will get submitted to the Department of Education together, and they will calculate and combine those hours together. So if you're working multiple or part-time, that's totally normal. That's something that many borrowers who qualify for PSLF do. You will just need to fill out a form for each of those qualifying employers. And I see someone's, might have already done these forms before. That's great. And I'm glad you're sort of ahead on that process. One of the great things about Savi is that, you may find that you may not have been on the right repayment plan or the lowest one potentially for you. And so this is a great opportunity to get on the right track. We can also help monitor and manage those applications going forward. I know a lot of borrowers have really struggled with getting these forms submitted and getting reviewed in a timely and accurate manner. A lot of times it's taken months and they've been falsely rejected. And that's really where our team comes in. All right. We are going to be sharing a copy of the recording. I don't know if we're going to be sharing the actual slides, only because oftentimes with the way that policy changes, we don't want to have some slides out there that might be out of date. I mean, sometimes what we share today can be out of date tomorrow. So we think that, a recording that is timestamped can be the best way to do that. But the best way to get any of your future questions answered would be to create that Savi account and get in touch with our team. To Beth, who asked, my son lives in Maryland, what features would he receive with a free Savi account? So he would be able to create, you could invite him to create a Savi account. He would not be able to receive the free Savi premium account because he's not a resident of Oakland County. You would, but that, you can still invite him to receive access to Savi right on your Savi dashboard. Actually, there is an invite friends or family feature, and I can go back and show this to you here. One second. Sorry for the flashes. Let's see here. I'll show you right on the dashboard. There we go. Okay. So right here where it says invite friends and family, right there, you'll be able to, Beth, put in his email address and he will be able to receive a link to create a Savi account. I saw another question come in. Someone asked, is Savi a loan servicer? No, we are not a loan servicer. You can kind of think of us as an intermediary or an advocate on behalf of you, the borrower. We're there to reduce that friction between borrowers and their servicers, but we are not a servicer. So we would not take the place of that servicer. You would not start making your monthly payments to Savi. You would not need to, you would not need to move your loans to Savi. So the DIY plan, Torenda, is free for anyone, but Oakland County gets that essential for free. That's that premium service. Oakland County residents get that essential plan for free. All right, let's see here. We're just trying to go through a couple more in the Q&A. Okay, Amanda asks, who is Oakland County's HR contact to submit the form to get credits added? If it's not already automatically entered into the system, Katie, I'm not sure if that is, we might be able to help provide that for you.
Yeah, I'm looking into that right now.
Awesome. Thanks, Katie. Savi is not affiliated with Mohila. No. Oh, looks like we got an email address. Thank you, Angie. All right, let's see if there are a few more questions here. Someone asked, if the expected income and loan repayments you input, is it okay if they're estimated? Yes, that's totally okay if they're estimated. Not to worry. Derek, if you invite a spouse during your active application, and if that spouse also, assuming they are an Oakland County resident, then yes, they will have access to the free essential as well. You shouldn't be seeing a price when trying to go through this. So here, let me see. And I want to make sure that you're registered on the right site here. Ty and Scott, if you're still seeing pricing. Give me 1 second. I'm going to put in the chat right now. This is the site that it should have taken you to register. Let's see, oaklandgov.savi. And what we'll make sure of is anyone who attended this webinar, we'll make sure that if by chances you registered on a different site where you're still seeing that, we can make sure that you are put onto the one with that free essential. It should be showing up right when you register. Amanda asked, where do I go to add HR info to get the credits and form? So you're going to need to go through and submit and answer the questions in the Savi application. So you're going to want to go through and you'll reach that after the plan results page. that's where you'll be able to see that. Okay, it seems you might have a correction here. It is oakgov.bysavi.com. All right, I want to make sure everyone has the correct address. I just put this in the chat. It is oakgov.bysavi.com. Nope, you don't need to use your Oakland County work email to register. It is free and open to all Oakland County residents. You can register with your work email if you'd like to, but you don't need to. Okay, got it, Scott. We'll be on the lookout for that. Thank you, Scott. All right. Well, we are wrapping up at the end of the hour here. I'm going to share my screen once more, but I want to make sure everyone, again, I'm going to put this link in the chat, oakgov.bysavi.com. Oakland County should be covering the costs for the first year, if not longer. But you will never be charged without your permission or anything like that. All righty. Well, I hope that this was helpful. Thank you all so much for attending. Again, you have this correct link. I apologize for that in the chat, oakgov.bysavi.com. And again, if you didn't get to create an account, not to worry. We're going to be sending out an email after this to all of you with an activation link. We'll make sure everyone gets on the right page so that you do not have to worry about any of those fees. All right. Thank you all, and big shout out to my colleague Katie for diligently answering so many of your questions. Again, we hope that this was helpful. Thank you again to all of you, and we look forward to helping you in the future.